No, no, I don't think this cross. I think Kailash, you
Yeah,
want to,
so
yeah.
let me just take on the two questions that's raised. So one is around aging, and the other was on things.
Excuse me, just a moment. He's answering a
Let me
question.
answer. Thanks. So one was on aging, which you said, and that is in the context of a contract which we are looking at or we are selling for the next 10 or 15 years, right? So if I talk about a life insurance contract, I'm saying I'm talking about a contract which is sold for the next 10 years or 15 years at the least. And therein, what is being observed is that people are living longer. So as you said that, look, a majority of people are below 35. That's a demographic segment that you need to tap into. But come to think of it, 10 years or 15 years down the line, this below 35 is going to shift to 45 and 55. And that will become the bulk of your population. So do we have a product, do we have a contract where we can actually go ahead and say that, look, this is the demographic segment you want to address? Be it in terms of pensions, be it in terms of healthcare, be it in terms of taking care of these folks when they cannot or they are not earning for themselves. And that is the context where we have to look at. So it's a challenge in front of us. Currently, this is the working population. Currently, it might be subsidizing the benefit pension schemes for older people. But what will happen when these guys turn 20 years older? So it is in that context, and we have to look at it from that perspective. Adding on top, what is happening in India as well as globally is that longevity is going up. And when I say longevity, it's typically saying that, look, people are expected to live longer. Right? So if that is the second layer of complexity, if you were to add it, then you're actually looking at people who constitute two-thirds of your population and who would live not for the next 30 years, but maybe for the next 40 years or 45 years. And then what are you going to do with them? So, you know. In terms of the second question that you raised, sir, on the phones and things getting integrated and whether it's happening in urban or it's happening in rural as well. Now, coming to think of it, it's happening in urban cities for sure. In rural, whether the smartphones are having their inroads, yes, one can question that, look, that's not happening to the extent. But are these guys getting hooked onto phones? For example, if a farmer wants to has a query on why the crop production is not up, or is there a insect that's eating into the crop, the question can be just put on a call center, and the call center chap gets back to that individual and says that, look, this is what you should be doing, or this is what that's going wrong. Earlier, these guys would not have access to that information. They would not be aware. They wouldn't be able to reach out to that pool of intellect, that pool of Q&A where they can reach or directly probably speak to an expert and say that, look, this is probably what's going wrong in my crop yield, and can I go ahead and do something? So is there merit in linking that to and saying, can I look at crop insurance? Can I look at you know climatic conditions, or a climate insurance, or a weather linked crop yield insurance, or any such thing? So we have to look at it in that context. So hope I was able to address the question.
Thank
I
you.
think we'll have to close this session at this juncture, and it's not exactly a foreclosure.
Thank you, Mr. Ghosh. Now I would request my colleague Tania to kindly request Mr. Sutanu Ghosh to hand over the memento to our special guest, Mr. Kailash Mittal.
Thank you very much. Thank you very much.
To Mr. Munish Sharda, our guest of honor. And our chief guest, Mr. K. Sanat Kumar. With this, we'll conclude this session, and we'll have a quick 5 minutes break, and then again we'll join with the live and non-live session. Thank you.
Kailash, you can carry on, right?
Hello. Uh, Good morning, ladies and gentlemen. We would be starting our next session in few minutes. I would request everyone to kindly take your seat, please. We are going to start the next session due to time constraint, we are clubbing the live and non-live together, but there will be a sequence, like after live we'll have non-live. It would be more in the format of a discussion mode. I would request all of you who are at the back, you can take your cup of tea and please take your seat, please. We would be starting the next session in few minutes. I would request everyone to kindly take your seat. We are about to start the next session. Unfortunately, due to constraint of time, we are clubbing the live and the non-live session, though there would be a sequence of live and then non-live. Ladies and gentlemen, I would request everyone to kindly take your seat, please. We are starting the next phase of the seminar. I would request everyone to kindly take your seat, please. May I request Mr. Kailash Mittal, Director and Actuarial Practice Leader, KPMG India, to kindly anchor this next interactive session, for which we have clubbed the live and non-live. I would request Mr. U.S. Roy, Director, India First Life Insurance and former MD, SBI Life Insurance, to kindly come up to the stage, sir, please. I would also request Mr. Khalid Ahmed, Head Product Management, PNB MetLife Insurance Company Limited, to kindly come up to the stage, sir. I would also request Mr. Parthanil Ghosh, Chief Marketing Officer, L&T Insurance Company Limited, to kindly come up to the stage, sir. I would request Mr. KVR Krishna, Regional Manager, United Insurance Company Limited, to kindly come up to the stage, sir. With this, I would request Mr. Kailash Mittal to take it forward from here. Thank you.
You are a star speaker today.
अपनी लैपटॉप बंद कर दो. That's right. Okay. Thanks, Anab, and good afternoon, everyone. To be honest, this is going to be an impromptu extempore session that I'm trying to host with the elite group here on the dais. Not at all prepared, so do pardon me in case there are any glitches or any misses from my end. So, as Arnab said, what we've tried to do is we've just bunched up the live and non-live discussions together, given the time constraints. So what we'll do is we'll start with the live first. There's no hard and fast boundary between the live and non-live, because end of day, both of them cater to insurance, and both of them try and meet the end user's requirement, which is trying to prevent or trying to nullify the financial impact of an uncertainty in one's life. That uncertainty could arise from a life and death event. It could arise from a health event. It could arise from fire, from floods, from whatever, right? But end of day, it's a core insurance offering, and I think from that perspective, it's good that we are kind of merging the two sessions. Uh, what so we've got a varying range of experts on the dais, and what I would request each one of you guys is to just briefly introduce yourselves and your experience in say around 30 seconds each. So we could start.
Should I start?
Okay, yeah, you can start.
Good afternoon. I'm KVR Krishna, Regional Manager in United India Insurance Company. I joined the industry in 1988. I've put in 28 years of service in various levels at the branch, at the divisional office, and now at the regional office level. I've been in marketing, claims administration, and now in an overseeing role. And this invitation to participate here has made me very happy. It's a privilege to be with you, and I hope that we will have a good session. Thank you. Sir.
Hi, good afternoon, everybody. Yeah, I think it's working now. Hi, my name is Khalid Ahmed. I currently head products for PNB MetLife. So I'm actually born and brought up in Calcutta, so I've done all my schooling and graduation here, and then I have an experience of around 14 years, of which predominantly in insurance. I've worked in distribution, in actuarial, in products and strategy as well. And really, it's a privilege to be here, for this roundtable discussion. Thank you for inviting me here.
Good afternoon. My name is Parthanil Ghosh. I am the Chief Marketing Officer of L&T General Insurance Company Limited. Like Khalid, I am also from Calcutta, so just a bit older. So 24 years of experience ranging mainly BFSI, including NICO, ILNFS, Society General Bank, and then L&T Insurance. And also involved into various functions, including mainly the strategy and the distribution. And I'm absolutely delighted to be a part of this, session and to be able to sit on this dais with these eminent speakers. Thank you.
Good afternoon and welcome to this panel discussion organized by the Bengal Chamber. My grateful thanks to the Chamber for giving me an opportunity. My name is Uday Shankar Roy. I, as you would have guessed, from the present you're going back into the past. I joined, I'm a banker basically. I joined State Bank of India way back in 1971, and I have been associated with the insurance industry, first with SBI Life and then with in a consultative capacity with some others, and now I'm on the board of India First Life Insurance. So essentially I have been in the financial sector since 1971. I would be covering a bit of how the perspective on insurance, whether it is life or general, how the perspective has changed over the last almost 4.5 decades that I have been associated with the financial services industry in some capacity or the other. Thank you.
Thank you, gentlemen, for your introductions. So as Mr. Roy said, let me just start with Mr. Roy, since he's volunteered himself and he's the man with the most gray hair on the dais. So, sir, given your vast experience spanning over almost 5 decades, just wanted to understand how have you seen insurance evolve, and what is it that you would want to share in terms of your experience with us?
Uh, I'll take one example from my own life on both life insurance and general insurance.
Sure.
I was given the appointment letter to State Bank of India to join State Bank of India in 1970, towards the end of 70 or early 71. And the first thing my father told me then was, see, I have a old friend who is an LIC agent. Now that you are starting to earn, I was all of 21 years, a few months then. You started to earn. I think he has been teaching you, guiding you over the past 10 years at least, 10 years from 71, before 71. So he said, why didn't you take an insurance policy? So I said, what is it? Why do I need it? I mean, you are still there. I mean, I have a job and all. He said, no, you take an insurance policy because he will pay the first 3 premiums and it will be a policy of 15,000 rupees.
Okay. That's a
Sum
big
assured,
sum.
sum assured. You
In
have to pay
71
the
years,
premium over 20 years. And it was an annual premium or something like that. It was coming to 600 some rupees over 20 years or 25 years. I don't really remember. So he said, you do it, but first 3 premiums he'll pay, 3 quarterly premiums he'll pay, and only after a year you will be required to pay. So that was my first policy. Unfortunately, it was also my last policy. I've never taken a policy because till I became a life insurer myself, that was the only experience I had of a policy where my father said you should take a policy because we have to help a person who has been guiding you and helping you so far, and he's an old friend of mine, that is my father's. So that was my first thing. On the general insurance side, it was a slightly different experience. My father had bought a car in an Ambassador in I think 60 something. And the debate then was whether to take comprehensive policy or third-party insurance. So he said, anyway, if you take a comprehensive policy, one is it's very costly. Secondly, if you make a claim, they'll ask all sorts of questions and all sorts of photographs and all sorts of delays. So take a third-party insurance, because without a third-party insurance, going on the road is illegal. So you take a third-party insurance. It was a couple of 100 rupees or something those days for an Ambassador car. So that was my experience, and that thing I handled. So I had to pay out that money, and my father gave me that money to pay, and that was my experience of general insurance. So, and in the banking side, when I was just narrating a small incident relating to my start in banking. You know, those days there used to be ledgers. So we used to pull out the ledgers and write by hand manually. Everything was manual, obviously. And the ledger keepers, especially in public sector banks like State Bank of India, the ledger keepers were fiercely possessive of their ledgers. They never let, because the handwriting would be different and there could be cuttings which was not liked by them. In fact, it was more fierce than today we find Virat Kohli's aggressiveness. It was, in fact, I was rebuked by one. We, as probationary officers, we were on the counter for 2 years. Only after that we were allowed to come behind and pass checks. Up to 1,000 rupees was a princely sum which we were allowed to allow payments up to 1,000 rupees after 2 years. So that was the period when we joined. Insurance then was LIC. Someone asked a question in the previous session I heard about why LIC is so predominant and LIC is the best, and Mr. Mittal was given the, no, I think Mr. Sharda was given the difficult task of defending the private insurances. And no, it is, LIC was the only one. So this is where I come from. And then 2006 I joined the SBI insurance arm of SBI, life insurance arm. We didn't have a general insurance arm in those days. And it was a new experience. We didn't know what an actuary did. Indian insurance industry outside the LIC was like a black box. So we had a product designer from the foreign partner, which in our case in SBI Life those days was BNP Paribas Insurance. We had an actuary who was also from there. We had a distribution head who was there who was supposed to do distribution in India. So we had to hire all the heads from the foreign partner who had anyway only 26% stake in the shareholding. So that was the nascent stage of private life insurance, and I'm talking of 2006, where already quite a few companies, I think 13 or 14 companies had come in by then, and we had almost, how much should I say, 6 years of experience. In 2000 we started.
Yes,
no?
2000.
So
was
6 or
liberalized.
6 years of experience gone in, but that was the stage. And obviously all insurance companies were in a loss, and the guiding principle those days was top line. How much of business are you getting? There was no concept of a profit in insurance in the private sector. And LIC, of course, was a black box to the private insurers because no one knew. They could quote any rate, they could beat anyone at any product. So there was no question of competing with LIC in any area. So we went on a opening spree. Fortunately, in SBI Life it was not so, but many of the other private life insurers of those days, 2004, 5, 6, it was a boom period for opening branches. I remember in one insurance company, I went to IRDA with a permit for, seeking a permit. We had to take a permit for opening offices before the start, at the beginning of the financial year. So I went with 200 offices. He said, the IRDA person who was handling it said, 200 offices? A much smaller insurance company has come with a request for 1150 offices, and we have given it. So State Bank of India, for its life insurance subsidiary, is asking for 200 offices. So that was, it is just to illustrate the guiding thought then, the mindset then. Even IRDA was telling us, just 200 branches of SBI Life that you want for this year. This was, I think, 6, 7. So from that period, through the downturn, 6, 7, 8, there was a huge upsurge in the valuations, and we had virtually every foreign banker, investment banker coming to us in full strength, asking us, when are you hitting the IPO market? What is your valuation? How are you doing it? So questions which were, so euphoric feeling was there that we are doing something which has a value in possibly millions of, tens of millions of dollars. And everyone was excited. Then came 2008 and the whole dream crashed. The biggest losers were the ones with a very large number of offices, where immediately a curtailment started. Brick and mortar, and those days the talk was brick and mortar versus online thing, which was just starting up. Everyone said brick and mortar will die out. Even in the banking industry, people said brick and mortar branches would die out. Everything will go online. So that transition took place between 8 and 9, and by 10 it had stabilized into a different kind of, a more mature kind of market. Now, one of the guiding features, I think there was a question in the previous session also on the wrong selling, regarding people selling, insurance agents selling what they thought were the best offerings from their point of view, from their commission point of view. And those commissions were, again, the IRDA regulations of today had not yet come in. So mis-selling was, let me put it in quotes, it was rampant. And we really were thriving on a top line market. After it stabilized, a lot of regulations came in. This, we were just comparing at one stage, doing some research on how the European and the UK insurance, life insurance industries moved during their initial phases through this regulatory cycle. And we found it was very similar. In fact, during 8, 9, 10, it was almost like we were saying every product had to be approved. I think in 2010 it was there, when every product had to go back. And there was one actuary, director actuary in, or member actuary in, Mr. Kannan was there.
Mr. Kannan.
He was there in IRDA, and his team was very weak, so no approvals were coming. So all the, and you couldn't file a product, you couldn't launch a product unless it was approved. So this was the kind of tussle. Every product was looked at with suspicion. So we have gone through that phase, and today, if we look at the insurance industry, which I'm sure my younger friends who are much more conversant with what is happening today, today is a far more stable market, far less mis-selling. Yes, the pressure of selling on an agent is still there. He has to sell. But today, if you ask, there was a question also on online research and then manual buying. I think something like this was there in the previous session. Now, the very fact that people have a portal on which they can go and search online. Yesterday I was talking, not yesterday, yesterday before, somewhere in some seminar I was talking to someone, and he said, no, for my personal use I have a Mediclaim policy, I have a term policy. I mean, so structured thinking in the matter of insurance. I have a term in the matter of life insurance. I have a Mediclaim policy, my family's health is insured. I have a term insurance so that in case something were to happen to me or my wife, the future of my children would be taken care of. Now I am going to start a pension plan so that the other part, that is, you can insure for either living too little or too short a life, or for living too long. Today the accent is on insuring for living too long. So the insurance, the pension plans part. So he was a very young boy, about 27, 28 years old, had joined a company, was getting a reasonably decent salary. He was thinking on these lines for insurance. He was not thinking about investment per se at this stage. Possibly that was his next this thing, because he had one child who was very young, and otherwise his family was a very small family. His mother was there and his wife was there. So that was the kind of family. So the entire paradigm shift in insurance, from the day my father said you take an insurance policy because a friend of mine is selling it, he's an LIC agent and you need it, he'll pay your three premiums, first 3 premiums. From that time to this, talking to this young boy who was telling me that I have these 3, what would you suggest? Do you suggest anything else? Now, because he was so articulate and he said, I have a Mediclaim policy, I have a term policy, term plan for me and my wife for the benefit of the children, and I am going in for a pension plan, there was little I could suggest to him. He had himself insured in a comprehensive manner, and he was all of 28 or 29 years old. Just had one child and a very small nuclear family. Nuclear nahi, his mother was there with him. So this is the journey that the insurance industry has gone through.